The Coca-Cola Company is one of the most iconic consumer brands in the world and a global leader in non-alcoholic beverages, operating in more than 200 countries. The company owns and manages a powerful portfolio of globally recognized brands, including Coca-Cola, Sprite, Fanta, and Schweppes, as well as fast-growing categories like Smart Water, Powerade, Minute Maid, Simply, and Costa Coffee. What makes Coca-Cola unique is its asset-light business model. Instead of owning factories and delivery fleets, Coca-Cola focuses on producing concentrates, building brands, and controlling marketing and pricing strategy. Bottling, logistics, and distribution are handled by local partners around the world. This allows Coca-Cola to scale globally while keeping capital requirements low and margins high. Compared to PepsiCo, Coca-Cola's key advantage is its higher net income margin. While PepsiCo operates a more complex business that includes snacks and food manufacturing, Coca-Cola remains highly focused on beverages, branding, and marketing excellence. Thanks to its brand power, global reach, and pricing discipline, Coca-Cola consistently converts revenue into profit more efficiently than PepsiCo. In short, Coca-Cola is a simpler, more focused business with stronger brand-driven profitability. Even a company as strong as Coca-Cola faces several important risks looking forward. Regulation and health trends remain a long-term challenge. Governments continue to push sugar taxes, labeling requirements, and restrictions on sugary drinks. At the same time, consumers are becoming more health conscious, which can pressure demand for traditional sodas. Changing consumer behavior is another risk. While Coca-Cola is expanding into zero-sugar, water, coffee, and functional drinks, shifts in preferences happen gradually and require constant innovation and marketing investment. Input cost inflation affects margins. Costs for ingredients, aluminum, PET packaging, and transportation can rise, and while Coca-Cola has strong pricing power, not all cost increases can be passed on immediately. Currency exposure and emerging markets add volatility. A strong US dollar can hurt reported earnings, and economic or political instability in emerging markets can impact volume growth. Valuation risk is also relevant. Coca-Cola is often priced as a safe haven stock, which means returns can be limited if growth slows or investor sentiment shifts. Overall, Coca-Cola's risks are manageable, but they mainly relate to regulation, consumer trends, and its premium valuation rather than the stability of the business itself. Over the past 5 years, Coca-Cola has faced several notable challenges. During the COVID-19 pandemic, the company experienced volume declines, especially in away-from-home channels such as restaurants, cinemas, and sporting events. At the same time, input and logistics costs increased sharply, putting pressure on margins during the global inflation surge. Coca-Cola was also impacted by currency headwinds, as a stronger US dollar reduced reported revenue and earnings from international markets. Another important challenge has been the long-term shift away from sugary beverages. This forced Coca-Cola to accelerate its transition toward zero sugar, water, coffee, and functional drinks. Finally, the company underwent portfolio rationalization, discontinuing underperforming brands and restructuring operations to improve efficiency. While strategically positive, these changes temporarily increased costs and execution risk. Despite these challenges, Coca-Cola remained profitable, continued paying dividends, and preserved its strong brand position. Despite the challenges of recent years, Coca-Cola has several strong long-term opportunities ahead. One of its greatest strengths is brand power. Coca-Cola owns some of the most recognizable brands in the world, which allows the company to raise prices while maintaining customer loyalty. The expansion of zero sugar and healthier product lines represents a major growth opportunity. Products like Coca-Cola Zero Sugar, flavored waters, and functional beverages continue to gain market share. Emerging markets remain another key driver of long-term growth. Population growth, urbanization, and rising incomes support increasing beverage consumption in these regions. Coca-Cola's asset-light business model is a powerful advantage. By focusing on branding and concentrates rather than manufacturing and logistics, the company generates higher margins and strong free cash flow. Finally, premiumization, such as energy drinks, coffee, and ready-to-drink beverages, allows Coca-Cola to improve mix and profitability over time. From a long-term investor's perspective, Coca-Cola offers stable and predictable performance. Over the past 10 years, the company has delivered an average annual return of 8.8%, including dividends, reinforcing its role as a defensive, income-generating stock. The valuation appears relatively elevated, with a P/E ratio of 23.3, reflecting the strength of the business and the power of its global brands. A low beta of 0.39 highlights significantly lower volatility compared to the broader market. In terms of financial stability, leverage remains well controlled, with net debt to EBITDA at 1.9. A return on invested capital of over 15% demonstrates efficient capital allocation. Coca-Cola also stands out for its strong profitability, with gross margins exceeding 61% and net income margins above 27%. The higher price-to-free cash flow multiple reflects the premium investors are willing to pay for consistent cash generation, brand durability, and a resilient long-term business model. Coca-Cola is also well known for its reliable dividend profile. The current dividend yield stands at 2.89%, with a payout ratio of just over 65%. This indicates a healthy balance between rewarding shareholders and retaining capital for future growth. The dividend is well supported by strong and consistent cash flows, making the stock attractive for income-focused and defensive investors. To summarize, Coca-Cola represents a high-quality business built on some of the strongest brands in the world. It delivers exceptional margins, predictable cash flows, and low volatility. While the valuation remains on the premium side, investors are paying for stability, resilience, and long-term reliability. If you're looking for a defensive cornerstone in your portfolio with a dependable dividend, Coca-Cola clearly deserves a place on your watch list. If you found this analysis helpful, don't forget to like the video and subscribe to the channel. Your support really helps a growing investing channel like this one. Thank you for watching, and I'll see you in the next video.